with that.
And then you're going to show us what is SNR, and you're going to show us, somebody else is going to show us what is gaps if they feel confident enough.
Okay, yes.
Thank you.
This is my first time teaching, so I'm going to try my best.
Though, right? You're a English teacher, no?
Yeah, you have to make me to share the screen because I can't right now. So
I got you.
Okay.
All right. You should be good.
Yeah. Yeah. Okay. Okay. Everybody is watching my screen right now?
Yep.
Yeah. So let's start with the SNR. So we have around six types of SNRs. The first one is the breakout SNR, and we are going to let me where is the arrow? The road. Okay. With the breakout SNR, we have to find the something like this. We have this, then we have a miss. We confirm the level right here, like that, and then we break. We make a miss again. We confirm the level, and then we bounce from there. And we have this level from here, and we call this breakout SNR. Like that, we have a miss right here, and we have a miss right here. Okay, something like that. And we are going to try it. It's not complicated. We are going to find some example right here on H1, for example. We are going to delete this, and it's empty. Okay. Let's find H1 fresh SNR, for example. I always try to do this. I change to the line chart, or we can do this with candle as well. And let's try to find one. For example, this one in H1. Let's try. We don't have miss, so I don't call this a fresh level right there. So we have, for example, this one. Maybe yes, it is, but it does. We have miss right here. We have miss right here. Right, don't bounce. It doesn't bounce. Let's try to find another one right here. For example, this one. Maybe yes. Yes, this one. It's a, for example, a breakout SNR because we have miss here. For example, right there. Here miss. Miss, we break, we have a lot of miss, and then we bounce in the same level. So this is how this is a breakout SNR. Robbie, it's okay or not? It's okay.
That's perfect. Yep, that's exactly right.
Perfect. And then we can do this, and we have the same example by the other way. If we have any troubles with that. So 100%. This is the. It's okay. Okay, then when we finish the breakout, we have the easiest one that is called the classic SNR. The classic SNR is very easy because we only have to find a level, and then we have a miss. We respect the level, we confirm, and then we go. This is for down example, and then we have the other one that is something like this. We have a miss, confirm the level, then like that. Okay, this is very easy to find because it's like try to find a support and resistance, so it's not complicated. It's the first thing that you have to know when you come to trading. Okay, we are going to try to find some example of classic SNR in H1, and let's try to find one. This one, for example, we can call, this is not the freshest level because we already have this tab here, but we have a miss here, a lot of miss then, and then we tap the level and then we go. We're trying to find another one, for example, sorry, I am a little bit nervous. So this one, for
It's all
example,
right. No, it's good. It's good.
look at this level. We have this, we have a miss, and then we bounce from the front level. This is a strange level because we bounce a lot of time in this level, but yes, this is a valid SNR right here in H1. And then we have this one, for example, a little bit strange because we go in this way, but it's okay as well. Okay. This is the second one. We're going to put this right here. And then we go with the third one. And the third one is head and shoulders. Four head and shoulders. Okay. And this is very easy. You can call it Quasimodo as well. And then we are going to try to find something like this. We have high, and then we have a higher high, and then we have a break. Then we come to the same level, and then we bounce. Okay. So we have to find this level from here. This is like the shoulder, head, the shoulder, head, and shoulder. And we have the other example is shoulder, head, shoulder, and then, okay. And we have to try to find the lever right here. Okay. This is the head and shoulder. Let's try to find one head and shoulder in H1. And then, no. This one, no. No. Let's try to find another one. Another time I found one, but this one. Maybe this one. This is an H1, but maybe in another time frame, we can have a head and shoulder right here. But I'm not sure from that. Here is small one.
Yeah, that's a head and shoulders.
Yeah, it is. This one, shoulder, head, and then it's.
Yep, that's valid.
It's not the best one, but it is as well.
Mm-hmm.
This one did not tap the shoulder. The last one, maybe this small one.
Yeah.
We have shoulder, head, and then we bounce it from the same level. We speak into the Telegram. And then we go to this is a little bit difficult. The first time that I try to find is a little bit strange. That is the breaking head and shoulder. This is the 5-1, 5-1. Here, 5, breaking head and shoulder. And here we have like the first one and the second one that as Rob explained to me was the double version. I'm going to explain as well. Double version. In the first one, we have the shoulder right here, and then we have the head right here. When we broke this level, and then we come back to the same level to the shoulder, and then we bounce. Sorry, guys, let me move this to the bird like that. And then we have to find this level. We have the shoulder, the head, and then we break, and then we come back to the same level that the shoulder. And then we continue to the upside. And let's try to find another one. We have the shoulder, the head, we break, and we come back to the same level than the shoulder, and then we come. This is the second one. And then we have the double version is a little strange, the double version, but it's like it's pretty similar to this one, but a little bit strange. That is this one. And correct me, Robbie, if I'm wrong.
Yeah.
Okay, with this one, we have the shoulder, we have the head,
Mm-hmm.
we have a break, from the upside, and then we have a break to the downside.
That's right.
We come back, something like this, I think it is. And we have to, and we
like
have
this.
to,
You have it. One little extra step. This one is valid. It's valid. But I think what you were trying to show us is
the normal ones.
Yeah.
Okay, so
yeah.
Forget this, forget this one. We have to with this one.
Mm-hmm.
The breaking head and shoulder is very easy to find, but we have to find a break. Shoulder, head, and then break, and then we come back to the same level as the shoulder. Okay.
Mm-hmm.
And the 5-1 and the okay, we are going to find a break.
I think that's good. I think that's good for head and shoulders. That's the basic concept. It's just the violation of a shoulder level.
Exactly. Yes, exactly. The violation of this. Yeah, exactly.
Yeah.
And then we are going to try to find some example. It's not easy to find one of these, but we are going to try. If you know, we can move to another one. Okay, we have a break to the upside. No, it's not. No. Shoulder. Another.
Antonio,
Yes.
I
Tell me.
think you missed one. I can't see it though. I think
Well,
you just
right.
missed
You can write. You can write if you want. You can write.
right there. Stop. If you go left. Yeah, stop there. Move your mouse a bit to the left. A bit down. No. Don't worry. I can't write. I don't know how to write. Just leave it. It's all right.
You can write if you want.
Go back into this zone right here. I think he was pointing at this level.
Or maybe.
Yeah, that one.
Yeah, exactly. Yeah. Yes.
That one was a hard one.
Yeah. Super hard one. Super hard one. But yes, it is. It's a setup, but it's really difficult to, because in this moment you are trying to you are focused maybe in this lever, trying to bounce right here or something like that. We have because you have
this
a miss.
also breakout too. Breakout.
Exactly.
Too.
Yeah.
So that's nice when you have multiple SNR levels in a zone that line up with current price action, and with the help of trend lines, you'll be able to get involved in these moves. Great.
Totally.
I'll let you continue.
Totally.
A couple more examples of broken head and shoulders, and then we'll move on to gaps.
Okay. Let's try to find more examples. Maybe shoulder, head. It's broken by disrespect at all. It's really difficult to find this one, but because you normally aim focus on head and shoulder, normal ones and classic SNRs, but shoulder, head, and we come back. We have a break, but not. No. Let's no. Maybe no. Break. This not one. Guys, if you find someone, tell me, okay?
It's cool. Take your time, because this one is the hardest one. Not the hardest one. It just doesn't happen all the time.
Exactly.
So,
yes.
Take your time. Whenever I teach this in the beginning, I always get flustered too, because I can't find setup. If I don't find one, everyone's gonna think I'm a scammer.
So you feel what I feel. Okay, we can.
Yeah. You're good, bro.
Okay, not here. Maybe no. Listen, no. It's the number one. Oh. Okay, shoulder, head, and then we buy. This is normal one as well.
If you want, like the example that you mentioned, you can go different pair. For example, Euro USD 14 December 2022.
Okay, I try to don't look all the, but okay, let's go because it's a line chart. It's candle,
In 1
so
hour.
1 hour. Which
14 December 2022.
14?
Yes.
Whoa, so far away. 14 December 2022.
Right
Here.
there, I think. Yes. So you can see there is a head and shoulder. The price has taken the low, but it took also the high of the head, and it went again downside over there. No,
You see
go to the right.
right here,
Yes, right here.
we have the
So
shoulder,
you see,
head.
it took upside again, and it went the reverse of it.
Yeah, this is like the double version, but Robbie told me that I don't
No,
have to
it's fine.
explain
Go
that.
ahead. Go ahead. Mark it. You can mark it. It's
Okay,
fine.
this is the shoulder level. But
And it bounces slightly far away, but it does.
okay, yes. Okay. Amazing example because it took like 14 December to 2 weeks to develop this trade, but it's good as well. Okay, let's try to find another one. Show this is
This should be another one in here.
normal one here. And
Right here. This is one right here.
bad one. Normal one.
See?
Where? Here.
This guy, if you zoom in a little bit, no, it's fine. Right here. That's the shoulder. That's the broken head and shoulders.
You have the shoulders. I don't see
Because
here.
look, this is it right here. You have a shoulder level, you have a head, it goes down. We want to sell here, but instead what happened was price actually
Went up.
It didn't
And then
sell
we have
here.
like
It didn't
here.
sell here. It actually went up and then came back to test this level.
Exactly. Yeah. Difficult one, but it is.
This is also another variation. It's a little messy, guys, but it's also still considered. Can you see how it just wicks into this level? This is also broken head and shoulders. It took a while for price to actually break it, but it actually comes back to test it right
True.
here.
From here.
Yeah, so that should be it for head and shoulders. It looks like you have a good understanding, Antonio. I hope everyone is fluent with that moving forward. It's going to be very important for you to be able to identify this in the live markets. In the live markets, it's much easier. Yeah, I'll take over. We'll go over gaps. Someone's going to have to teach gaps, but the importance of knowing this is so then when it comes to live markets, you know exactly what you're looking for. Like it's not pattern trading. We're only identifying levels. If you want a pattern trade, then you can just trade head and shoulders and double bottoms. But obviously right now it feels like that we're not gonna focus on patterns. It's mainly because when you look at the reactions coming from these levels, it's what's driving price to its next destination. It's one of these levels. One of these levels is causing this, including gaps. And it's a nice little segue to go into gaps. Does anyone feel comfortable explaining what gaps are, other than Antonio, because he's been very active and forthcoming with explaining? Can anyone else come and share their chart?
I'm on my phone, but if you want me to open my PC, I can.
Sorry?
I'm on my phone, so
Key
I
West.
can give it.
Okay, do I continue with the gaps?
Huh? Yeah,
It's the
why
last
not?
one. It's the last
Yeah,
one.
go ahead.
It's the last one.
It seems like you really like to. Okay, that's good. I
Okay.
like it. That's good.
Okay,
That's
this is the sixth one. Gaps. Okay, I'm going to write like this because it's very easy for me. Gaps. Okay, gaps is the space between two candles. This is very easy to understand. We have one candle here, then another candle. Between these two candles, we have this space. This is between, this is the gap that we call gap. Okay, so we have to find this place like support and resistance, and we have to expect to the price to bounce from here, and then broke, and then bounce from here. Okay, this is very easy to find, gaps in H4 and H1. For example, here in H1 we have this gap, for example, and we have this gap, for example. I'm not going to go deep in between which gap is better, because this Robbie think he's better than me. So then we have the breakout gaps. Then I understand that breakout. Let me write again. Breakout gaps. I think it's the gap that, for example, we have something like this here, and then the price goes up, and we have here one candle right here, and then we have another candle right here. So this level, because of this gap, the price break this level. So we have this gap makes a breakout, and then I call this level a breakout gap. So we have to try to find that the price respect this gap and doesn't close below to the continue high. It's correct, Robbie?
Yeah,
It's correct.
yeah.
And the same we have something like this. Now we have like something like this. Oh, sorry, let me delete this, and then we have something like this. Oh, actually it can do this. We have the level, and then the price goes up, and then we go down. These two candles, consecutive two candles, makes a breakout of this level, and then we have to expect that the price respect this level to continue to the downside. And this is what I call breakout gaps. And this is the sixth, if I don't go wrong, the sixth of all of the SNR that we have to find in the
I think
chart.
my understanding was different for the breakout gap. It's not this way.
Okay, let's right here if you want.
Hey, I don't mean to cut you off. I'm gonna reclaim host for just a minute because it looks like there's a couple people trying to join. There you go. All right, I'm gonna let you share again. Is there anyone else trying to join? Okay, no, there's 3 people waiting in the lot. All right. Hey, Mahdi, sorry. Hart, Conan, we're here. You guys hear us?
Yeah, bro.
All right, cool. All right, go ahead, proceed. Antonio, I made you host again.
Do I continue?
Yeah. I just have to add some other people in.
Because
Sorry about that.
No, don't worry. Because
yeah, you should be able to share. Yep.
Now, yes.
Yep, we see your screen.
Okay, perfect. So we're going to continue with the gaps, but the sixth one now who spoke before say that he has some different understanding. I'm going to write gaps, breakout gaps.
I think it's Saraf.
Gaps is I'm going to repeat. Gaps are two consecutive candles in the same way, in the same direction, and we focus on the level that the space between the two candles. We can call these gaps. Gap, and I try to find us that if this gap make a breakout structure right here, for example. We have this level, this SNR level, and this gap makes the break of this SNR. So we have a breakout gap because it's possible that the gap doesn't break anything. So we have a regular gap because let's try to find an example. For example, in this is H4, okay? So in this level, we have this gap, for example, this gap, and this gap. Okay. In this example, I found that this gap is the most important because it makes the break of this level. So I try to find like a rejection like this, for example, in these two levels, but mainly in this one. Because this gap doesn't break anything, but this one break this SNR. So, and then we have a beautiful retracement, and then we continue to the sorry, to the downside. Let's try to find gaps in H1. Okay, we don't have gaps here. For example, we have a gap. We have another one here, but price doesn't respect this one. It also reacts beautiful. It reacts beautiful to this one, but doesn't continue to the upside. And then we have this one, and the price respect beautiful, and then we continue to the downside, and then we have to stand like this. Another one, we have this one, and also is the first one. This is the first one. It causes all the break of this level and this level and these small levels. So this is a beautiful one. Price react perfect today, but it continued to the upside. Maybe because we have another gap here that causes the break of this level. Then we have this level. This is M30. Sorry, this is M30. We are going to move to the like this. Then we have this gap and this gap.
I think there's an example that's very nice on the lower side.
Yeah, it is.
Yeah.
It is. And the price reacts perfect to this gap. I try to find entry today here, but my problem was that because of the price, look, the price close below the gap.
Yeah.
That's why I didn't try to find a buy entry like that, but I was to try to find an entry there.
Just out of curiosity, has anyone been trading gaps in the live market yet?
Yeah, me, yes.
You've been using it? Yeah.
Mm-hmm.
The way that you're using it, when you said that you try to focus on gaps that cause the breakout, that is a good way to start out with using gaps. So you don't want to take every single gap that comes in the market.
Yeah.
You're going to drive yourself crazy. And also, if you find that, I'll let you finish, and then I'll take over.
Okay, so last one we can finish right now, Robbie. I try to find an entry right here. I didn't remember what's last Friday, in this, because I tried to refine a little bit, but this gap I found here was so curious because it causes this break, and for me this level is break, this level is break, this level is break, and also this level is break. So this gap for me, it was very important, and I tried to find an entry right here. And I think that was like that, but this is not sorry, but I try to find an entry like that.
No
and
worries.
that's all.
You could see there was for this example, there was a breakout level right here, and then your trend line was right there.
I try to find, like, in this case, Robbie, I I always mark the two levels. The green one also used to be the gap, and I mark like that gap.
Yeah.
And the another one I mark like that. This one, SNR, and I mark SNR, for example, and 30. And then we have a 30 and the gap. And I try to focus on the two levels and respect the two levels. The two levels. For me, it's important that. And that's all, guys. That's all. If you have any question or something like that, you can ask me as well, or Robbie, but I will try to answer your questions.
No, I think you did good, bro. I think you have a good, decent understanding of these levels, and everyone should try to reach some type of intermediacy with this with these levels. Oh, that's good. That's good. I'm gonna reclaim host, Antonio. Thank you for sharing. I really appreciate it.
Thank you.
Thank you. Thank you very much.
It was nice. It was a nice exercise for you.
Thank you, Antonio.
No problem, guys.
So I know that there were some people who had questions about breakout gaps. People came across the issue where the miss was actually happening, and then it would break out, but then it would still react to an unfresh level. Or a miss comes in, there's a miss here, but then it breaks out and then it tests here. What I want to say, the general rule of thumb is that if these both are fresh and you mark this out, that's great. That's what you want to look for. If you see something like this, you should still consider this as a valid breakout level, right? This is a breakout, regardless of whatever you want to call it. It's still a breakout, but there is no fresh. Let's see H1 now. Now you can see that this is a fresh breakout level. So the power of multi-time frame will give you this. If you find that a level is being tested here, it's not fresh, you move to another time frame and see that this is still a valid breakout level. H4 and H1 is lining up perfectly. How can you get involved? You know that you're already bearish and you want to sell, and now we're going to look for trend lines. So find something like this. Easy. You enter right there, 20 pips, and you're done. Done. Easy. So today, again, we're going to look for trend lines. I want to clear up one thing with gaps as well. So we already know there's two types of gaps. Our level right here. We want to see price come into it, respect it, and then come back into it, and then we can enter. Gaps can be used the second time. So this is the second time.
Oh, I forgot that.
And it can also be used the third time. It's all right. So this is a regular gap. This is a continuation. If you're selling, this is a continuation down, right? As Antonio was saying, you can also have breakout gaps. And this is a variation. So remember this. When you watch the video, take note of this. Sometimes what you'll see is an opening and close right here, a level. You'll see it reject. And then you'll see price just break out from it, right? What you'll see is sometimes price will just come back in here, tap it and go, right? This is one variation. What I taught you in the beginning was this. I taught you in the beginning that there's an opening candle, it's still valid. You have open candles and it's a breakout, and then it gets tested twice. Still good. The key thing to remember is that the gap level needs to be tested and confirmed one time at least before you take the entry. If it's before the breakout or after, it doesn't matter. You need to make sure that it gets tested and rejected, because then it becomes a level that price wants to come back and visit again. Okay, so let's look at one or two more examples, and then we'll move into trend lines, the juicy stuff.
Robbie, I have a question here.
Yeah, man.
So if it is not tested, I mean almost touched, it's like almost touched, will be
Yeah.
and rejected. Will we consider that as a first moment?
Mm-mm. It needs to touch it.
It's
needs
like
to
maybe
touch.
few points away, maybe 5 points or 3 points away.
No. The general rule of thumb is it needs to be tested. If it
It
does,
must touch.
it must touch. If it doesn't touch, then it's reacting to something else, most definitely. Right?
Okay.
Robbie,
Yeah.
and can you go to the current price, please?
Yeah.
Yes, rate this. Can we find this for our setup like that? Because this is a shoulder. Or this.
Can you change your color to?
Yeah. Sorry. This is the shoulder.
Yeah.
This is the head, and then we break. And we expect to the price to come back to here and then continue.
Yeah. So let's
For
go to
example.
H4. Let's see something in H4.
Yeah, it's a small one, but it is.
Yeah. Yeah, but this is what you guys want to make a habit of doing, right? You want to go to H4 first, mark out H4 key levels,
Exactly.
right? Oh, why am I using Zoom? Let me use Trading View. You have
Nice.
key level here. You have key level here. You have key level here. What else? You have key level here. Why this is a key level? Because it's a broken head and shoulders.
And then
All right.
if we have a miss, we can call another level to rebounds. That's my main problem. I don't really know which level to focus, you know.
Yeah.
That's my main problem.
Okay, so I'm gonna talk about what other people say, and then I'm gonna talk about what I say. Other people say is you mark out all these levels, and then you pick one or two, right? Usually the apex or the shoulder, and then you forget about these two. The general rule of thumb is yes, that is very true, because most of the time price will gravitate towards the area that caused the breakout. That's just the fundamental nature of how price action works. If you look at an example in that regard, you could see that the breakout happened. We could just look at this right here, right? The breakout happened. Well, you guys don't know about this, but this is a breakout right here. This is a breakout. It doesn't look like it on the H4, but it is a breakout. Let me show you. Go to H1. It's a breakout, right? So if you go back to H4, we want to see price come back to these levels. So what do you see? You have this right here. This was the last point that caused this breakout. So we want to see this level get rejected at least once, or the one above it. All right. So what do you see? Price comes up and jabs into it. Now you might be uncertain, like, oh, wait, so it tapped into this, but not tapping into this. Let's see what's happening. This is why closing price is very important. And when I enter trades and I tell you guys, okay, so if you guys are, for example, in this trade, you need to see price close below this level first for you to hold it. But what do you see happening here? You see that price is already into drawdown. This is without a trend. Let's just say you got into the trade from this level. You're already in drawdown. So you would actually want to close your trade. So then how can you get involved in this setup? Okay, well then you see you have, let's go to H4 real quick. Anything else in H4? Anything else? Nothing. Then you'll go to H1 and see you have, okay, this one, and I'll mark out this gap as well. So you see that price is actually respecting this level. At that moment in time, you see that you entered here. Let's throw in the trend line for now, actually, because it'll make it much more precise. Okay, you see how this is one of the trend lines, it's 411. You would not enter at this level right here, actually. You would not enter at the SNR level. You would enter when price touches your SNR level and it touches your TL, right? So if you entered here, you also see that price is rejecting this gap. This gives you more confidence to hold a trade. Instead of your SL being right here, you being almost in 20 pips drawdown, you're in here and you have almost 0 floating drawdown. So let's see what happened here. How much drawdown? 4 pips drawdown, right? Excellent. So how do you manage this trade? This is some secret sauce that I want you guys to start picking up on because I introduced it already, so might as well expound upon it a little bit. To manage this trade, you want to see the closure of the gap, the closest gap or the closest engulfing, right? The closest gap is actually, you look very closely, guys, check this out. Do you see this right here? This level, engulfing look. Do you guys see it? This engulfing, this bearish candle engulfed this, it consumed the previous candle, right?
Yes.
That gives you the early sign that price is gonna go. Any pullback is any rally up is just a pullback, and that is holding true. This is also a breakout. You may not be able to identify it now, but on the lower time frames, this is a breakout. But the fact that this level was violated by this level is a sign of continuation down. So what happens? Price pulls back, it's rejecting our gap. It's giving us more indication that this is rejection and price wants to go down. Okay, great. So now what do you see? Price actually also even just closed below this gap. Even if it's just the slight closure, the smallest closure. This is why you guys have to be extra precise now, because closing price, OHLC, is going to be your guide. It's going to teach you how to understand the language of gold or any other forex pair, but gold specifically. You see, this is also another hint, right? Rejection up here, and it also engulfed the previous open. It consumed this candle. Hint that price wants to go down. Any rally up is just a pullback. So what do you see? Another rejection, close. And if you look very closely, this closure was below this one. This closure was below this one. So now what do you see? There is a gap being formed, right? A gap being formed, and also the gap being tested, rejected. So what do we also see? Again, this was our classic SNR. Price is now closed below it, and it gave us a couple signs of continuation to the downside. So you're in profit already. What is next? How do you manage this trade? You want to see the closure below this gap. In this time frame, you want to see this level being violated. Why this level? Because this gap, this opening closed look, was responsible for the break of, was it a break? Okay, no, this level right here. I'm not gonna go over this stuff right here, but this is something that you may want to watch a couple times in the recording. But if you can pick this up before I go over it, you'll be in great shape. But you can see this engulfing, it was responsible to send price down, right? Something reacted to send price up. But the purpose of this example is this open and close was the reason why this was broken right here. You see this second candle closing above this. So in that moment of time, you would have to diagnose this level saying that it caused a break of this level and it pushed up. So right now you see price is actually respecting it, right? In this time frame, price is respecting it. We are already bearish. We know that this is a pullback into our level, like we already discussed, the apex of the move, and we're just trying to sell, and we want to hold it. So we have to find signs of continuation. When the moment you see this, you want to set your trade at break even immediately. First of all, you want to pay yourself however you want to do it. This is a rejection. So what could happen is price could reject it again, and then it could reject it and then shoot price back up, and we don't want that. So protect your capital. So we managed the trade going down. All right, great. What do you see? This is trading view. So if I move to the next candle, it's going to create automatically. And I apologize. I wish we could see the actual creation of candles. So you can also even make the decision of whether or not you want to enter again or close the trade in the creation of the candle. So what do you see? Like I said, price came back to this level and rejected it. But we have to ask yourself a question, right? Upon this rejection, did it break anything going up? Did it break this gap level? No. Did this break this gap level? No. Did this break this gap level? No. This rejection didn't cause anything to go up. It didn't tell us that price wants to go up. So you would still be in this trade. You would manage it, continue going down. All right. All right. So now we have good indication that price is going to go up. We have enough evidence to say that, yes, rejection, and now we have an engulf. But
Robbie, we know that in the moment that this candle close, because if the price close above these levels, it's go
yes,
to the
so
upside.
yes,
Okay.
yeah, like I said, I apologize because TradingView doesn't give us the organic creation, so we can't see how this candle is forming. But then when you're analyzing it through multi-time frame, you would have this level marked out, and before the H1 candle closes, you will already have indication that price wants to push up with these prior candles being formed. But let's just continue on and see if this trade would have taken you out, and I want to see if price actually came back up here or not. Yeah, so price came back up here, no worries. It did come back up there, rejected, and it dropped. So to answer the question, going back to the whole example of which levels do you pick, for now, in the beginning, I want you guys to focus on mainly the levels that caused the break of something. And obviously the apex. And for this example, it was the gap, they were H4 level, H4 classic level, but it was also the reason why price came down. So H1, H4, you want to obviously work with them as well, but the catalyst of the break of structure, so head and shoulders, and then these, if you want to. Breakout level it's good, but you need more information for breakout level. For breakouts, it's good. Again, if you have a couple gaps like this that line up with your breakout level, and you see a rejection happening already, then you can enter, and this worked out pretty good. But okay, let's go over trend lines. We're going to go over the basic format of trend lines, and then we're going to go over the types and the usage of them. Okay, so trend lines. Can anyone tell me what they know about trend lines? Not my trend line, just in normal sense. What is a trend line?
It's a line
Not a-
that the price respected. It does respect it multiple times in general.
Exactly. Yeah. So generally, it's what people use to contain price, either in a range or to determine if it's going to continue a trend, buy or sell. We have people who use trend lines like this. And that is the most basic usage of trend line. You have the outer, you have the inner. People say that the break of this trend line is the break of the trend. This is not how we're going to use trend lines at all. No. I meant to draw an X, but yeah, we don't use trend lines this way. We use trend lines for precise entries. Trend lines are going to be used for entries. We have 6 different types of trend lines. You guys won't find this information anywhere on the internet. You guys won't find this on YouTube. You guys won't find this anywhere. So please use this like it's like your best friend. I mean, it's literally I can't even spell trend lines. What the hell? It's autocorrect. I use trend lines for every trade, every day. Trend lines help me determine how I enter my trades. And if I see that my trend line, for example, is for this recent price action, let me go back. Let me go over the trade that I caught yesterday, right? Last night, I was having a lot of difficulty finding a trend line. I think it was Antipas or Titan Hero. She was mentioning, and you know what? It's crazy because I actually caught that trade because someone mentioned these levels. I wasn't even at the screen. But then I saw again the head and shoulders and also the classic. I don't know if you guys recall, but I did say observe these levels. At that moment in time, I was looking for a trend line. I was having a lot of difficulty. At first, I saw we had TL6. This one is good. This one is good. You could use this one. And I'll go over the type in just a moment, but I was having a lot of difficulty finding the distance wasn't really that good for me. The points were not equal, so I didn't really like that one, especially for H1. And I'll go over that in just a second. The trend line that I used was this guy right here. Do you see how near equal they are? Spacing between this is pace 1, 0.2, and 0.3. It's much more evenly spaced than the other one. The other one was a lot of disparity in between.
Robbie,
Yo,
one question. Do you focus on the distance between the points of the trend line?
100%. I'm going to go over that right now.
Okay,
So,
perfect. Okay.
Trend lines. Okay, we have Can someone tell me which example is the best one?
B.
B.
Yes, B is correct. Can someone tell me which time frame we could use A and C?
M30 H1. Maybe, I don't know.
Not exactly. A and C, these two can be used H4 and above. H1 and below, you need them to be evenly spaced, equal, or damn near equal. The reason why you can have a little disparity between each point on a higher time frame is because the weight of the higher time frames can give you that leeway. H4 trend lines again can be uneven because of how strong those levels are. Let's see this one. No, that one didn't there. That one didn't work out. Let's look at this one. Okay. This wasn't too bad, not too bad actually. Spacing is pretty equal, which is great. If it's an H4 trend line and the spacing is pretty equal, bro, you know it's a strong one. It's a strong one. It's a strong one. Let's look at some more H4. All right. That can take too much drawdown. There's a better one. Okay, so you see these. Spacing is not even, but even though the usage of this trend line makes complete sense, it's a breakout. And we have price respecting as a support, breakout, resistance, resistance. This is type 2. We're going to go over them right now, and then we'll go over a bunch of examples. I'm jumping ahead of myself. I apologize. But I'm just so excited to show you guys examples. All right, so we have determined that H1 and below, the spacing between the trend lines need to be equal, like this. H4 and above, the disparity between them can be uneven, like this, or even like this, all right? Points 1 and 2, the points need to be drawn from the closing price. So if you have a trend, if you have a moving average on your screen, or if you don't really need it, you can just determine that this is a closing price and this is a closing price, and that is sufficient enough. I like to use it because visually appealing to me. But you want to connect point 1 and point 2 at the closing price. And then usually the third tap is going to be a wick. All right. Point 1, point 2. If I zoom in, I'm connecting it from the closing price, and then the wick entry right here. Okay. Super powerful. You don't want to draw trend lines using more than 2 points. So like, I don't want to see people drawing trend lines with 4 points. That's not how we use trend lines, right? This is 1, 2, 3. Yeah, no, we're going to focus on just 1 touch, 2 touch, third touch is entry. And you can also use trend lines again over. We'll go over some examples of the repeated use of trend lines, but as you can see, it's one touch, two touch, and then it respected it. So yeah, closing price at the first 2 points, and then third tap is entry.
And Robbie, in the last example, in this one, in that one, the current price.
Oh yes.
In this trend line, we have this one, this level, and then we can use this as a gap, for example, and we can do, because you see H4.
Yeah.
I don't know. I'm just
No,
asking.
you're fine. Let me go over trend lines, and then we'll go over a bunch of examples, and then we'll also go over current
Mix.
market price. Yeah.
Okay.
Yeah. Let me
Continue,
just go over the fundamental stuff. So
Okay, sorry.
so we can get the information out. So yeah, H1 and below, evenly spaced. H1 above, it can be uneven. Closing price at 0.1 and 2, like this. Closing price, and then entry. Okay. For buys, price needs to cross above SNR first, and then tap into TL. Okay. For sells, price needs to cross below SNR and then tap into TL. We'll go over this in just a moment, but that is a very important rule, okay? That is, these two are very important, so remember that. Now, let's go into the basic format of Trendline. Trendline type 1. It's the easiest one to identify. Just 1, 2, 3. 1, 2, 3. The basic usage of this trend line would be for a continuation trend, where price comes back up to it, 1, 2, and 3. Kind of like a channel, but not really. Let's not even look at it that way. But yeah, it's just a continuous flow of price. Yes, that's trendline type 1. Type 2 is a breakout. You have resistance, support, break of this support turned into resistance. We have resistance, break of resistance turned to support. Okay. Type 3. Okay, so type 3, from the people that I've learned from my masters, type 3 is actually the channel trend line, right? We don't use that. This is type 3. I will show you guys later. It's not needed, but if you guys really want it, I will show you. Type 3 is just a big channel like this, but you'll find that you'll you're gonna find that before you use this, you're going to use the other ones, and this kind of is just redacted. You don't want to even really use it, because if you use this, okay, you can use this, but then you can also find trend lines within price here, you know what I mean? There'll be better and cleaner and much more precise trend lines. So that's why we don't use it. Trend line type 4 is powerful as fuck. So I don't like this. You'll
That's
see
called,
this happening. Go ahead.
sorry, that's trend line is called 411.
Yes,
Why?
or
Louis?
411. So there is a SNR mentor. He goes by the name of 411. Okay, he taught my mentors, and my mentor taught me this. So it's either called type 4 or 411. Maybe some of you guys follow the guy. His name is 411. And
Yes, I do.
actually,
I do.
yeah. So this is his trend line, and him and a few other people were actually responsible for actually putting these trend lines together. And I'm just a vessel to pass this information down. And I will show you how you can utilize these at its full capacity. All right, we'll go over some cool stuff after I go over the basic format. So that's 411. It's pretty much the reversal trend line, as you could identify. If I could just refer back to the trade that I caught yesterday, it was a 411 trend line. It was a reversal trend line, right? Yeah, it was. So hi, we have price pushing up. In this time frame, you are bullish. You should be bullish, right? Price broke out. That's a reversal sign, right? So you look for two trend lines, type 4 and type 5. Okay, this is type 5. This is also a reversal trend line, and type 4 is right here. Okay, you want to see pretty much type 4 is resistance, support, resistance, support, break, resistance. So if we go back to the drawing, you have resistance, support, resistance. And if you want, this is for the bearish side. For the bullish side, you have it would be, sorry. Yeah, actually, that's right. Am I doing something wrong? Support. No. Why am I doing this wrong?
You initially do it right, I think.
I'm like dyslexic. I can't even draw the flip side of it. Let's see if I could do this right.
I should go lower now.
No, 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 no. I'm fucking retarded. Oh fuck. Oh fuck. Hold on.
Shall I annotate one?
Excuse me?
I got it.
Nah, dude. What the hell? Um, it's funny. My mentor had the same issue with this. Let me go back to right here. All right. Oh God. Okay. So we went over the sell side. This is resistance, support, resistance, support, resistance, support. Oh God. All right. All right. Sorry about that. So if you can see, right, this is kind of like a head and shoulders, right? You have the head, a shoulder, head, breakout, and then it's coming back into it. This is a trend line that you want to use mainly for reversal looks, right? Again, I'm gonna draw out this right here. It's support. Did anyone ever see this trend line before?
No, me not.
You guys ever used this before this trading strategy?
No, no.
Okay, cool.
No.
Keep this a secret. Don't tell nobody about it. Keep it your own. Oh, by the way, we're going to sign a non-disclosure agreement so you don't leak this content. This is your content. You paid for this. Don't share it with people. Master it. If you want to share it with somebody, make sure you master it before you share it to somebody. Because if they have questions, they're going to ask you. And if you can't explain it right, then you shouldn't be sharing it at all. Okay? So that is my 2 cents for now. I'm going to make you guys sign that paper. And yeah, we'll talk about that later. Master this stuff and then share it with other people if you want to. The TL5. Don't share this stuff with people if you don't know how to use it. And then because what happens is if you share it with somebody and they ask you questions and you don't know how to explain it, they're gonna say, oh well, this shit is scam. This is all back tested trend lines. They don't work. I had so many fucking people who came and approached me about trend lines. They're saying, oh, it's subjective and they're all smart money fucking noobs and they don't know how to trade, period. And they're saying, oh, your trend lines don't work. Well, I literally on live chat with you guys caught this trade minute by minute. I was giving you guys updates of this trade caught right here, gave you screenshots and everything. You know what I mean? So this stuff is super powerful. If you catch 1 or 2 of these trades a week, you're fucking golden. Okay, this trade right here, it was 150 pips right here. Stopped right here at almost 150 pips, right? This gave me almost $8,000, right? Period. I'm done. I didn't even trade any of this. I didn't need it. I don't need it. So what I'm saying is if you guys can master this precision, if you can master these trend lines and master the levels, you only need to catch 1 or 2 setups per week and you're good. Before, when I learned about this stuff, I was looking for every setup because I want to see the setups happening. I want to see this is true or not. I have SNR and I have a trend line. I want to see the reaction. I'm going to take everything. After a couple months, I was like, you know what? Yeah, they're working great, but do I need to catch every single one? If I catch this bottom here, Do I need to, is it really necessary for me to catch the reaction from this resistance? No. Is it really necessary for me to catch this move down? Absolutely not, because I'm already bullish. So why put myself in that stress when I'm already in this trade right here, bullish, and I'm swinging this price? And we're gonna learn how to manage price, but why? You know what I'm saying? So going back to the point, if you guys want to share this stuff with people, make sure you master this stuff, and then you could share and teach to whoever you like. I don't care, your family, friends, girlfriend, boyfriend, mother, father. Please do, because this stuff is powerful, and in the right hands, you could make a lot of fucking money. Okay? So moving forward, sorry, that was my little rant. I like to go on those sometimes. Okay, moving forward, you have trendline type 5. Again, this is another reversal trendline. It's where you have the combination of TL4 and TL1, where in between you're gonna have like a head, kind of like a head and shoulders as well. So another variation of it is going to be right here. So the head can come between the third or the second, or the second or the first. This is 0.1, 0.2, 0.3, 0.1, 0.2, 0.3. All right,
We can
bearish
ask a
example. Anybody have questions?
Yeah, I have a question.
What's up?
Should this be in straight line, or it can be a little bit tilted or no?
I'm drawing it a little bit uneven, but when you look at H1 examples and below, they will be you will find evenly spaced ones. You will find it, and I'll show you.
Okay, cool. Thanks.
No problem. Okay. So we have, this is sells. We have buys. Oops. Okay. 0.1, 0.2, 0.3. This head can also come in here, so it could also be like this. Okay. Pretty simple. We have trendline 1, 2, 4, 5, and 6. Type 6 is pretty much like a breakout. So pretty much like a breakout trend line, type 2. So we have the test of support, break, resistance, resistance. For this one, you have 2 tests before the breakout. So you'll have it like this. Okay. And buy side would be, buy side would be resistance, resistance, breakout, support. Okay. Cool. These are going to be your trend lines right here. Did
Did we
anyone
miss
watch?
type 3?
Yeah, so I explained, I'm going based off of the format that I was taught by my masters. Okay, all right, let's go over type 3. You're going to find that you won't use it, so that's why I don't really teach it, but let's go over it anyways. And we'll go over some examples and why we don't really want to use it. It's pretty much just a channel trend line. Your regular support, YouTube support and resistance trend line, outer and inner. Pretty simple. All right, so let's go over each example, and then we'll go over how to use them. Okay. I'm gonna clear my charts because you guys have the notes on this. Okay, so let's go over trendline type 1. Trendline type 1. All right. Also, your homework, before I forget to explain it to you guys, is going to be to mark out the levels and then find examples of trend lines. So example of that would be you identify your setup level and then you draw your trend line. So this one is classic level and this is TL5. You're going to do 100 examples of these, or however you want. I personally did 100 examples of each. When I learned about this stuff, I did 100 examples of each trend line. And then by the time the next week came, I was better than everyone else. So if you guys want to work hard, do that, do 100, and you're going to be better than me. And I want you to be better than me. All right, so this is TL type 1. Why this trend line? You have your classic SNR right here. Price jabbed into your SNR. If you look, let me click this out. If you look very, very closely, actually, yeah, it jabbed into our SNR and are jabbed into our trend line. So this is a valid buy. Go up even more and look for some trend line type 1.
Robbie, I have a question here.
What's up, bro?
The point 1 and 2 should be
Yep.
touching the closing point, right?
Exactly, 100%. 100%. You can see right here. Maybe you can't see it. I'll change the color of my moving average. Let's do blue. Or red. Red is good. Red is good. So you see this is the closing price here. 0.2 right here. 0.3 is your entry. For this one, where is your SNR? I want to say this is a good example. Let me just go into 830 real quick because there has to be a level here. Okay, cool. So you have 0.1, 0.2, and 0.3, but this one actually didn't cross below.
Can we use the broken gap level?
Yeah, I was looking at that actually. Actually, you could use this level here. Nah, that's not the cleanest setup. Anyway, we're moving forward. This is a TL type 3. We'll look for combinations of SNR and trend lines after we go over some of the basic look of them. We'll do that. I really don't like this color. It's blue. Okay. Trendline type 1, type 1, type 1, type 1. Oh my god, not looking so visually appealing. Sorry guys. That's better. Alright, so this is TL type 1. Again, you have closing price type 1, closing price type 2, wick into your SNR. This is a good example of that price came into your SNR first, and then your trend line. So on this time frame, we'll go over risk management as well after if you guys have any questions. But generally, I like to use for H1 and below, 20 pips is pretty good. It's pretty good. This would have given you that. In the beginning, I want you guys to target 1 to 1 or 1 to 1.5. If you want to hold it even more, then at least set your trade to break even and let it run. And then we'll go over signs of continuation another time, not today, because that is a session of its own and it's going to take a lot of time and a lot of effort to go over examples. But yeah, generally in the beginning, I want you guys to do.
Ravi, I have a question.
The what? What's up? Sorry.
Yeah, is there any way to determine the point? I mean, the first and second point.
First and second point. So that is like in live price action. When you're trading the live market, this is an hourly candle, right? So you see that this is a breakout. You are expecting this to get tested. You have 1, 2, 3 hours to find a trend line. So you actually have to just exercise the 5, 6 types that you have. You have to see, right? For this example, you have TL type 5, right? No, this is not going to work because it's not actually crossing above your SNR. So that's out of the question. Then you also have something like that. This is 411. You have support, resistance, support. No, this is not 411. This is type 2. You have breakout, right? Support, resistance. That one is, you can have that drawn out, but you can see that this one is actually more closer to current price action, so you would not use that one. So it's a process of elimination and also just filtering out what happens at current market price action. If you see that price jabbed into your SNR and then it jabbed into your trend line, and then you see, all right, in live price action, this is going to be like this. It's going to be a full body candle right there. And you start seeing that price is forming a wick here. That's when you start lining up your shot. That's why when you look at my entries, I'm entering like that. Or what I see is sometimes I'm not too confident about the quick entry. What I'll see is, all right, the reaction is coming, rejection is there. And sometimes you'll see that my entry is coming a little bit below, which is fine. It's totally fine because I'm just waiting for, I don't use M5, M1 confirmations. Never, ever. I don't use M1 period. I don't use M5, none of that shit. I use H1. Lately, I've been using H4 and H1 religiously, and I'm getting very, very, very tight entries, even on H4. So it just goes to show that with these, if you can master these trend lines, you could get H4 entries sharp like that. But it's all about being patient, really. If you're patient and you see that, all right, this is a H1 time frame, you don't really need to being patient and being strong about the setup, right? You already have this determination that price is bearish. You want to get this retest in. You see prices rejecting here. You don't need to get that sniper entry, right? You can actually enter as it's rejecting. This market order, you don't need to set a limit either. This market order, enter here, and you could sometimes even get really tight stop losses after you see that rejection close, open here gives you even a smaller stop loss. Which is great. Okay, so let's go over some more TL1. Oh, we just did that. Let me go back. Oh, how are you guys good with time? Does anyone have any other obligations? Are you guys good?
No, I'm all good.
No. This is my priority, so don't worry.
Okay, cool. All right, cool. So there's a couple actually. Right here. Pinpoint. 1, 2, 3. So this is TL type 5. Remember when I said you got this one? All right, that's TL type 5. 1, 2, 3. We'll go over some of those later. TL1. Does anyone have any questions about TL1? Pretty easy, right? Take that as a no. So I'm going to go into breakout 2, TL2. You can see this, right? Tap 1, tap 2. You see this? Precision. Tap 3 drop. Tap 3 drop, yeah. All right, tap 1 is good. We'll go over type 2 now. Type 2 is this. Okay. The breakout trend line. Okay. Work? No, it doesn't. Let's see something. Let me go into 30 minutes. Oh, what the fuck? Okay. Forex.com. Oh yeah, and guys, by the way, use Forex.com as your primary source of analysis. Forex.com does give you the most precise data feed if you were to compare to other brokers and prop firms. Yeah, Forex.com is great. So let's see, type 2. Does this work? Let's see. Not exactly. Nothing happened there. Okay. Okay, that's type 2. You have type tap 1, tap 2, and tap 3. Precisely. 1, 2, 3. You have this right here. Tap 1, breakout, type 2, tap 3, 5. Cool. You guys see it?
Robbie,
Yeah.
what's the setup there?
Huh?
Setup for that trend line, that HNS.
That's the HNS.
Thanks.
Yep, no problem. Okay. Another one. Let's see. Breakout type 2, right? You guys see? This is support, breakout, resistance, drop. Let's go. We have support, breakout. No, this is resistance, breakout, support. Boom. Breakout, support, entry. Cool. Let's see.
And Robbie, I understand
Yo.
that H4 trend line are more powerful than H1 or M30
Yeah.
trend lines.
And I will show you guys something else called the order of X. This is where you bring other trend lines in from other time frames
Okay.
with the current time frame that you're using now. So you could also have, for example, this is H1, sorry. It's an H1 time frame. You could have trend lines from H4, and then you could have trend lines from H1. And if they cross, and in between, you could take an entry in between anywhere in this crossing zone. That's for later advanced knowledge.
Okay. Cool.
Yeah. Yep. That's powerful shit. Excuse me. Let's see. I mean, look, this is valid as well. This is valid. It's H1, but yeah, I just told you that the rules is they should be okay. When you find an H1 time frame and the spacing is not equal, the likelihood is that on M30 there's going to be something there. So let's go to M30 for this example. Right? You can use this, but the probabilities of it working out for you becomes 50%, as opposed to if it's evenly closely spaced and there's 3-4 candles between each point. It's nice. It's within the current range, current price action. It's relevant. So if you go to M30, what can you see for this setup? If you want to get involved, let's see if we can find something here. If you want to get involved, you would have to use Let me zoom in. Yeah. See? 1, 2. This is TL type 5. Sorry guys, I was trying to find TL type 2, but this is TL 5. 1, 2 head entry. TL type 5 is 1, 2 head entry. Same thing, right? What happened first, right? What happened? What happened? Let's look. Come. You have your SNR. Price jab into your SNR first, and then it touched your trend line. This is perfect example of how you should use trend line. Your entry can come there, or when you see a rejection, you enter as it's going down, right? A hint for you guys for risk management is if you're trading prop firm or if you're trading large position size, when you trade these type of setups and you see this rejection, you don't really go into much drawdown. Like you enter here and the trade is going down, you're entering with the momentum that you're trying to trade with. So it's falling and you're slowly layering your position. Or if you took one, what I'm saying is, if you're trading a prop firm and you see this, you could set your trade at break even immediately. Just for risk management purposes. If you want to play it safe, if you don't want to even risk letting your trade go into drawdown at all, and you want to just get those like quick movements, set your trade to break even, and then immediately, again, another hint, look for, if this is a bearish one, look for price to create an engulfing or a break of an opening close. That's the closest, most nearest obvious hint for price to go down. Okay, that's for later risk management. But as you see price rejecting, this is where you enter. All right, cool. TL type 2. Does anyone need more examples of TL type 2? This is TL type 2.
No, it's okay. It's okay.
Yep. Okay. So let's go to TL4. Like myself from last night, TL4 is this resistance, support resistance.
And Robbie, in that
Yo.
example, for example, we have this one is the other one. Not? For example.
For the SPY?
Yeah, for the new retracement here, can we catch this point and this like
Oh,
this?
sorry about that. Go ahead
Don't
and
worry.
mark it. Let's
This
see if
one,
that works. Let's see if that works. Let's see. You said this point right here?
exactly. Yeah, that
This
point.
point.
Exactly.
Point.
Yeah.
Yeah. If price came down, you could do that. You could mark it with this with this breakout
Exactly.
level. Yeah, you could do that for sure. I want to actually explain this in just a little bit. So remind me, okay? I will explain something to you guys.
Okay.
This is important. It has something to do with OHLC. Okay?
Okay.
I will show you guys exactly what I mean. Okay, so TL type 4 is mainly going to be used around reversal zone. So let's see if we could find some examples. Does this work? No, not exactly. Does this work? 1, 2, 3. Perfect, perfect, perfect. What do you see? What do you see? You have support, resistance, support. Do you see how precise this entry is, bro? Oh, crap.
Yes.
Do you see how it just taps it and goes? That's what this trend line can do for you. You may be asking, well, where's your SNR? If there isn't a clear one, you could. I'm going to introduce the rule now. You can use gaps as well as your SNR level here. I don't normally teach this to beginners because everyone then what people do is draw trend lines at every single gap. You don't want to do that. Please don't do that. Only at high probability zones. But you could see, right? Price tapped into our gap level and then our trend line. You can't see it clearly. Jab into our SNR first and then our trend line. Cool. Cool. Go to some more examples. Work. Nope. It should have done something like that, maybe. Yeah, it would have worked. So it would be resistance, support, break, resistance, and drop. But that didn't work. What actually worked here? Nothing on this time frame. All right, anyways, moving forward. T1. Yeah, nothing else here. Let's see. T1, 1, 2, 3. Gap. So SNR, classic SNR, how can you get involved? You have, can you do that? That's not one of them. Anyways, yeah, type 1, tap until here. NAR, I mean, that's a little bit too much drawdown. I don't know if that would work. All right, but let's go to 411, 411, 411. Want it? Yeah, that's one's it. So you have resistance, support, resistance, support, resistance. Your SNR right here. So into a confirmed gap to buy back up. Do you see the reason why we study these SNR levels and gaps? Every reaction we're getting at these levels, it's causing another reaction at another level. Tremendous. Another gap level. Buy. Yep. So this is taking SNR logic that you guys seen on YouTube to another level. This is deeper understanding, deeper entry criteria. If you watched AKFX, he's great. He's a legend. He teaches a lot of very potentially rewarding stuff if you use it right. If you can combine my stuff with his stuff, you're golden. No pun intended. All right. So let's see. More. Trendline. This work. Yeah, it does work, but I don't really see an SNR that's reacting from on this time frame. But it is a valid trend line. It is. You have a resistance, you have the support, you have the tap and resistance. It's like flip, you know what I mean? Resistance, support, resistance. Do you guys see it?
Yep. Yeah.
Okay, good. Okay, good. I'm doing my job. Nice. All right. What else? Let's go over some more. What's this one? Nah. Okay, let's go over some more. This is valid, but I don't know if you guys would have want to take it because you're bullish, but this is all right. You can draw it from this one. You have a resistance, support. Actually, no, that's TL type 6. We'll go over that later after this one. TL type 5. All right, moving forward. Let's do a couple more, and then we'll go into the next trend line. This support resistance. Nope. Anything here? This one. It is. But if it's hold, not really. So I don't want to really go over that example too much. Resistance for there's a couple here. Okay, let's see. Something here. Supports. Oh, this is TL type 5. That's why. TL type 5 is the support head, support, 5 back up. Nah. Gaps. This is TL type 2. This is nothing crazy. This is breakout TL type 6, type 6. This support resistance. Okay, this is TL type 4. What we wanted. Do you guys see it? This support, resistance, support. like I said, this is a very good trend line to use at key reversal points. Do you guys see it? Yes or no?
Yeah, yeah, yeah.
Okay.
I see it.
All right, so we'll go into the next one. We'll do TL5. I'm pretty sure you guys have a good guys got a couple examples, and I will give you guys some examples to look at of mine that I did before for other people, so you guys can check that out. TL type 6, it is, I mean, TL type 5 is what the head and shoulders trend line. Okay. So let's find that. This one. Not really, not the cleanest one. It's TL type 1. Type 1. Whoops. Do. Okay, you guys see. All right, that's sexy as fuck. Boom. 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 Exactly on the closing price. Closing price. Closing price. Tap. Drop. Then she goes. TL type 5. Okay. Look at some more. Type 5, type 5. Type 5, type 5, type 5. Right here. Would have put you in a lot of drawdown, unfortunately. Sorry guys. Let's see if there's a better trend line for this entry. If you wanted to look at this and you want to get involved, you would look at that one. You enter up there. You enter up there.
I think that will be better, yeah.
Yeah, 100%. Let's see why this didn't work actually. If you pick this one and put this trend line there, actually, very good, very good, very good. You would not use this. This is good example, guys. Remember this. You would
Because the
not use.
TL it's below.
Yes, correct. So you would have to, only one is this one. And for this price action, is this one. Why do you sell even here? Because you already have a breakout right here. Breakout retest. And you mark out this shoulder and the shoulder and this classic. You already determined that your trend line is below your SNR, so the only option is this one. Many times, bro, this is how your trades are going to be. You're going to go through filtering the combination. You're like, oh well, I have this level, the trend line is below, I can't take it. I have this trend line, the comment is above, but I can take it. I have another trend line, but the trend line is too far up. I mean, this one actually worked out too.
The TL will be like our confirmation mostly.
100%. It's like you're
got
precise. But this one worked too, yeah? You can have those 1 or 2 trend lines that give you the confluence to take the sell down. Yeah. Cool. Just a side note. If you guys do trade the news, one thing to remember is that the news 99% of the time will push towards the actual storyline of price. Right? This is side knowledge, by the way, guys. But something just came up to me because I feel like looking at this is like a news spike. What I mean by this is if you have a bullish storyline, the news is going to 100% push price towards the bullish storyline, right? This is a bad example, but just remember this. Just remember this. News will push towards the actual price, the storyline price. We'll go over that as well at another time. So let's go over TL type 5, type 5, type 5. No, not the cleanest. Didn't touch this one. Let's go. Nah. Here. Is that it? No, not exactly. How did this spike come? I'm curious. I gotta figure this out. See. Okay. Okay. 2015. I keep seeing this bubble here. Yep. I see. Okay. All right, moving forward.
I have a question.
What's up, bro?
Should the TL and the SNR should be on the same time frame, or it doesn't matter if you have the SNR on the 4
Good
hour
question.
and the TL we have it in 1 hour?
Good question. So the general rule of thumb is if you have an H1 HNS or H1 Classic, you want to pull your trend lines from the same time frame, right?
Okay, understood.
You want to pull it from the same time frame. But if that doesn't happen, say I'll give you guys a document after I explain all this stuff, and you can see what I mean by that. If you have 4 hour level, for example, something like this gap or something, whatever. You want to get advantage. You want to take advantage of this though, but you actually, if you look very closely, you don't have the confirmation of this gap level. But how can you get involved into this cell? You will have to use multi-time frame analysis. You'll have to go down to H1. All right. So then what can you determine? All right. This 4 hour level is also lining up with this one. You can see the rejection happening, right? And what else do you see? You have a trend line already happening for you. Let's see if there's any more other trend lines. I don't think this is one. All right, so we'll move price forward, and you see the 4 hour level is lining up with H1 levels of rejection, and you have the H1 trend line. That gives you enough confluence. When you guys practice this enough, and when you guys get your trend lines and your levels right, multi-time frame correct, this is all you need, bro. Smart money traders, they're considering liquidity, buy side liquidity, sell side liquidity, engulfing, I mean not engulfing, SVG, inducement, fair value gap, optimal trade entry. They have so many different things to consider before they enter the trade, which fucks with your brain because you do all that work and you don't have any like mental capacity left to enter the trade. When you have 2 or 3 things to really focus on, level and trend line, this is how your trades are going to be. Just very easy, 2 lines, and you enter. The reason why I get so passionate about it is because I used to trade smart money. I used to trade liquidity inducement theorem, and it
Me
was the
too.
most exhausting thing in my life, bro.
True.
I would
You
make
have to map out. You
yeah,
have to
you
map
have to do
out a
so
lot.
much.
Yeah.
Yeah, and it's just very stressful. It's profitable. Don't get me wrong. Shout out to ICT. Shout out to all those guys. But it was profitable, and for a good year, I made a bunch of money. But then in a good year, I lost a lot of money, and it was just very inconsistent. Nothing wrong with smart money traders because I have friends who trade smart money and they're killing it. But for my psychology, I feel like if I could just focus on 2, 3, 4 variables and get those 2, 3 things right, then I'm good. Like I don't really got to look for too much.
I got funded twice with SMC, but the only thing that I found out it was that the charts were on my favor. But what I did just to prove, I tested maybe a whole 1 year on this one soft Forex, and I wasn't consistent. I had a good win rate, but I had a poor win rate, but my risk to reward was good.
Yeah. Let me ask you
And
something. What was your average risk to reward?
with the guys that I was teaching, they were teaching me, it was like 1 to 10, 1 to 5, 1 to
that's
7.
bullshit.
Depends on the levels. And these guys, they were.
Yeah.
I found out later on that they were scammers, and some of them they use this non-regulated brokers to create live servers, which one they show fake results, and it took a lot of my time to prove it that a lot of effort that it's not consistent. Yes, you can get good trades. Yes, the price will react from fair value gaps, but it's not something consistent.
Yeah. It's so let me ask you something, guys. If you target 1 to 10, right? For example, let's just say it's a little bit high, but let's just say even 1 to 5. Let's just say that 1 to 5. The chances of you achieving a 1 to 5 versus a 1 to 1 or 1 to 2 is much less, meaning that the chances of you achieving this result is much higher than you to achieve this result, right? This could be, other people will argue this situation, but if you had a fixed stop loss for both these positions, and say you entered from, let's just say this position here, whatever. I don't even want to do that. But the chances of you achieving this right here is much higher than achieving this right here because you're in and out much more quicker than this. The reason why I want you to focus on this first is because once you start getting comfortable with taking these setups and you get confidence by taking these 1 to 1, 1 to 1.5s, and 1 to 2s, you will be able to now consider, okay, you have 2 or 3 lines in your chart at any given time. This is how your chart is going to be. Just 2 lines, bro. Just 2 lines. Once you start getting confidence to take this shot, okay, so you got in this entry, for example, 20 pips, 20 pips, 20 pips, 20 pips, 20 pips. That's 20 pips, right? If you do 1-to-1, right, you're already in the green, right? This is not, there's price didn't even break out yet. You're already in profit. The hour didn't even end. You're already in your TP, in your mind psychology, right? You're like, oh shit, this is a winner already. So what do? Right? You put your trade at break even once you hit 1-to-1, right? Then what else? What else do you do? You can put your trade at break even, let it ride. So you already, or what you could do is once you have achieved 1-to-1, you could put your SL at 1-to-1. So no matter what happens, you already got your fixed TP in your brain. Like, oh, I'm gonna get 1-to-1 in this trade. I don't care what else happens. If we don't know if price is gonna run up here, but it did. Okay, you could say, oh, I'm gonna close the trade at the when it takes this high or something, or even if it does get you that 1-to-2, like you could trail your stop. But the key thing to remember is that I targeted 1-to-1. I'm already risk free. I'm already in profit. I'm done for the day or something like that, or I'm done for this trade. Let it run. As opposed to you entering here like those smart money WWA guys with this 2-pip SL. I mean, it's very unrealistic, not practical ways of trading. It's very dangerous to come into the market to think that you're going to come in and get 2-pip, 5-pip SLs and get achieve a high success rate. It's very, very, very improbable with gold, especially. It's very impossible. Like it's like very much stressful, and your hit rate, my win rate is at least 85% the last 2 weeks, right? If I traded smart money concepts, my hit rate would be approximately 30 to 40%. 30%, let's just say 30% on average, maybe even lower. But my win my win rate is suffering. My psychology is suffering. But when I do hit big, I hit big, and that's just not sustainable in the long run. Most of my friends fail at smart money, and I don't know why they continue to put themselves through that torment. But you could trade very basic Forex patterns and be more profitable than trading smart money. Sorry to troll smart money, you guys. I'm sorry, guys. I just had a lot of pain with smart money, and I'm so happy that most of you guys are coming from smart money, and you're trying to move away from that hype, because it's toxic as fuck. People who trade smart money think they're the best traders in the fucking world. Yet they don't know that their mentor is a demo trader.
How we will determine the trend? For example, do we have to use like an EMA, or for example, how we'll know that to stop selling, but to invest in?
I'm going to show you how to do storyline, and I'm going to show you how to do direction. I'm going to show you how to map out your whole bias. We're going to look at monthly time frames. That's for not next week, but the week after. We're gonna do a full picture, all right? And you're gonna put everything together. And yeah, you're gonna be able to know where price is going. Let me go over the last trend line, and then we'll go over the current price action. Okay, so we have Trendline type 6, which is tap into pretty much the flip of support and resistance. Right here. Right. Again, I'm sorry for bashing smart money, but again, absolutely painful experience in my trading journey. And I thought I had no other choice but to trade it for a while because I thought that was the only strategy that I should trade. And I lost a lot of money and I lost a lot of time. And I'm so thankful that I trade SNR now. Very much more efficient. Okay, so that's it with that. Okay, going back to trendline type 6. Let's see. So you have resistance, breakout, support, and go. Not the cleanest example, but it's still valid. Okay, you have resistance, breakout, support. You might be wondering, well, where's your SNR? Let's go to H1. You have your breakout level right here. And you have this H4 trend line, but pull it over to, you'll bring that over. When you trade, you'll have that as a confluence. And then you also have this as a confluence as well. Well, that's not the cleanest one. I'm sorry, guys. Okay, let's go to M30. Something like this. No, that doesn't really do much for us. I think your best bet for this one would be to use this right here. It's valid. I would actually just straight take this one off the jump. If you don't feel comfortable taking this trade on the 4-hour, wait until this closes, and we're gonna go over something called last push. Last push is actually I won't even talk about it now. Last push is pretty powerful stuff, but again, that's gonna take another session. It's like double rejection at a key level. If you don't feel comfortable entering here, you enter at the second tap of it. But still, tapping into your trend line and your SNR. Okay, so move into another example. It didn't hold, obviously, but just for the example, you have the support, breakout, resistance, your entry comes here. Head and shoulders, entry. I mean, this still would have given you 1-to-1. Let's see if it did. I mean, it would have given you much more than that, actually. With you 1-to-2. Yeah, almost. Yeah, I mean, if you, yeah, 1-to-2. Cool. 1-to-3, 1-to-2. Let's go. What else do we see? I want to see how you could get in this. Let's see. You have this HNS. You have that is the cleanest one? No, that's not it. No. Honestly, Honestly, that would have been a
Maybe
hard one.
this one? Resistance,
Maybe
resistance.
that one. Nice. See. Yeah, that could work. That could work. Let's see if we follow. I mean, that's fucking tight, bro. That's really tight. Let me make this right. Yeah, that's great. That's great. And Tony, that's great. That's great. Nice. Perfect.
Perfect.
HNS and Trendline. Perfect, bro. Exactly. Let's see. Type 6. Type 6. That's a lot of fraud. That's not the entry though, since your entry would have to be this classic SNR. Also have this classic SNR. Where is the trend line for this? Can anyone point it out?
Yes, it may be that one. Yeah.
What else? What else? Yeah, I mean that's the cleanest one I see. And it's tapping into both of your classic SNRs, which is great. All right, moving forward. Wow. Okay. For break, resistance. Let's see if there's H. Oh, I don't know why I split H4. Sorry, guys. You go to H1. Pass myself. Okay. You see start gap level? Yeah. Gap level, but price actually tap into our trend line first. So seeing that this is a high time for trend line, we don't give it that much. So already we actually got to look for one on this time frame. What can we find here? One. Okay. Yeah. Perfect. Sniper. Tap 1, tap 2, tap 3. That's actually 411. Let's move forward to another P6. P6 is support, breakout, resistance, drop. SNR is right here. Oh, let's make that straight. SNR is right here. I know it's like, yo, I'm cherry picking the stuff. I'm only giving you examples. When you trade this stuff in the live market and you focus on certain levels, there's only, at this moment in time, there's only going to be 1 or 2 trend lines that could possibly work for this one. So for this one, you would most likely use this trend line here. Right? Do you guys see it? This would be your entry to go buy out. All right. So that's it for trend line. Again, your homework is going to be to get examples, 100 total of each. I want to give you guys another week or so to get this stuff done. if I feel like you don't, if I feel like you guys don't have at least 70-80% of it down, then we're gonna skip class, and then we're gonna make sure you guys get this right. If you can master trendline, SNR and trendlines on its own, you could trendline and SNR. If you can master these two without all the knowledge later that I'm going to provide, you can just master these two, which is identifying levels and then drawing trend lines. You're already in the profit right there. That's already enough to be profitable right here. Two simple pieces to the puzzle. The next puzzle is going to be MTF, multi-time frame, and you've seen a couple times already how I went to H4. Actually, I'm going to do that now for you guys. I'm going to drop in a document right here. This is the trading approach. You could use it as your wallpaper, however you want. But this is going to be kind of like your standard operating procedure. MTF, we're going to go over this, but just check it out, get familiar with it, and we're going to, in next classes, this is what we're going to be using. Yeah, I'm going to pin this actually. Is there any questions about Trendline?
So far, no. Just we need to practice, I think.
Yeah.
Yeah, yeah, we need to practice first and then see if we have any question.
Yeah.
Yeah.
Yeah, 100%.
And Robbie, what's about right now? What do you expect to the price? Which levels do you mark here
Okay.
right now
Yeah. Let's
for
check it out.
tomorrow? And then how do
Alright,
you
so-
see the chart? How do you see the chart right now?
All right, so the key level, again, I can't explain it yet because if I go explain this small detail, I have to explain everything, and I don't want to give you half information, but just know that this is a key level,
Mhm.
and price broke out from it. If you can see, right? This level was respected a couple times, broke out, respected. Price finally, weekly time frame, price finally broke it, right? So what do we know about whenever a price breaks, right? We know that if there's a breakout, there's always going to be a retest. So now we have to look for daily is retesting, right? Oh yeah, this is what I wanted to explain. OHLC, right? Open, high, low, and close. Right? This is a bullish candle. This is a bearish candle. I need someone to really contribute and answer this question. How is this candle formed? Can someone tell me?
Yeah, of course. I perfectly know that.
Yes,
Which
go
one?
ahead.
The yellow one or the black one?
Let's go with this one. How is candle formed first?
Something
Like
like this.
what needs to be formed first? Exactly,
It's
right?
for the yellow one, it's open at the bottom. It make the wick, it went above, and it make the upper wick, and it closed at the yellow body
100
close.
100,000%, bro.
Open, close, low, and high.
Yep, exactly.
Exactly, right? That is the formation of a bullish candle. Exactly, right there. Same thing goes with this one, right? So now let's go look at that in live chart. We have a breakout. We know that after a breakout, price is gonna go up, right? In our mind, we should know that. What happened? We know the pullback is coming. So this week, price opened up, created the low. Now it's going up. We don't know how far it's going to go up. We're going to find out soon enough after I explain this. And then it's going to create a close, right?
Yep. Yeah.
Because there's a breakout where we see that's happening. Very easy, very powerful stuff. So now we have to figure out where can weekly go. Let's go into this level here. I'm going to mark this level out, and I'm going to mark this level out. It's the closest key levels, and I will show you on the daily. Okay. Now you see that key level is also lining up with daily classic SNR.
Yeah.
Right? Daily is also coming to this gap right here. What we have to see today is we have to see right now it's 2:45 p.m. This is daily. Let's look very closely. Did this level actually tap into our level? I think it did, but I have to check very closely. I'm blind.
So, Robbie, you
what
mean
do
that we have like a weekly various bias, and right now the price is
Yes.
breaking the daily level,
Bullish.
so we are bullish in daily.
Yes. Yes. If daily closes like this, closes above our level, then yes, we would have to be bullish. We would have to be bullish, right? So then you would have to go back into weekly again, and then like I drew this level out. Okay, this is the weekly key level, this is the weekly key level. So to complete the daily storyline, it needs to go to a daily level. Daily, weekly level. What do you see right here? You have this level here as the most closest recent level that you want to target. But then you also want to monitor the area in here. So let's go back to daily. You also want to see that this break of SNR came from this daily level here. So I'm going to color it differently. This is weekly, this is daily and weekly. So I'm going to also draw this line up together. You want to see price come back into this level. If you see this, this is also a breakout, right? Check this out, bro. Check this out. Check this out. We know that from the basic view of OHLC is that, okay, this is break, open, open, low, high, and close. That's what we know, right? So on the daily, what we see is, again, open, low, high, and close. So what can we determine from that? If tomorrow or tonight, this closes above this level, this is considered a breakout. If we're going to keep going up, what's going to happen tomorrow? It's going to open, drop, high, and close, right? And it's going to come to test one of these levels. So if you see that price is going down, don't think that it's going to go down all the way. Because on the daily, we have to be bullish because of this breakout. Because, yeah, because on the weekly, we are expecting a pullback because of this breakout. I hope that makes sense. And I hope that this actually happens. like I just explained, if this closes, most likely, let's look at H4. I mean, it can still drop. It can still drop. It can still drop. And if it drops, let's go into H4. If price closes below this, then we could classify this as a rejection. But the fact that H4 already broke above this daily level, again, let me go back into daily.
We are bullish in
Yeah.
H4.
We are also bullish in H4, right? So again, what can we determine? The next trading day, we can see that price can open, drop into H&S zone like we have right here.
Yeah.
Why? Because this is the breakout zone right here. This happens to breakout. So it needs to come back to test these levels to go back up, right? It all follows with the storyline that we have to come back to test these daily, weekly levels. So let's see. There's a trend line. I don't want to draw trend lines, not yet. Not yet. We have to first see the closure and see. Okay. Also,
Okay.
this is a hint as well. So that was a daily level. This H4 level, key level, engulfing level. We're gonna look at this more in detail later, but price also broke above that one.
Oh, Robin, if I understand,
Yeah.
you don't mark SNR level in weekly. You mark like breakout gaps to
Yeah.
understand the storyline between weekly and daily, and then you. Okay.
I'll tell you guys right now. I'll tell you guys right now.
Perfect. I'm starting to understand many things right now.
Good. I want you to guys take this for a grain of salt. I will give you guys more information on this later on. This is going to be your basic look for your HTF direction. Weekly, daily, and H4. This right here, engulfing. You also have this right here. You also have this is bearish, bullish would be, oh yeah. If you don't understand this, it's fine, but I'm just going to give you guys the basic look of what I'm looking at. Again, you're not going to find this anywhere on YouTube.
For sure, Robbie.
All right, so this is engulfing type 1. This is type 2. Type 3 is just a breakout gap or gap. So we have this kind of what we already know of what gaps are. Yeah. So pretty much what I'm looking at on weekly, daily, H4, sometimes monthly, if it's close to the end of the month, then like right now, if we look on the monthly, we could see something very important for gold. Let me clear this stuff out. We can see the basic look, right, on the monthly. Look it up. You have this engulfing look. let's go into weekly. If the month closes like this, that means gold should be bearish. Now, if we wanted some evidence for that, we would have to look at weekly. What can we see? Gold broke out from this gap level break. So when this happened in live action, the break of this gave you a hint that price was going to keep going down. And what did it do? It went down. Before, people would look at the break of this to confirm bearishness. But we can get early sign that this is going to break from the break of this. Okay?
Okay.
Then what do you see? Price also broke out this move. Why this move? Because this move was responsible for taking out this SNR. Also, if you look back, it was responsible to take out these levels here. So I won't go into much detail, but when you guys see this in the future, I will explain why I just did that. It will make a lot of sense later. But it was also responsible for taking this one out. So what do you see? What took this level out? You have this close level right here. This is some deep shit, guys. This is like stuff that people don't teach. SNR teachers, they don't even teach this stuff to their students because it's kind of hard to understand and it's literally like the game-changing shit. So sometimes teachers don't want their students to do better than them, and I'm not like that, so I'm gonna give you everything.
This is really beautiful, Robbie. Really beautiful.
Yeah, man, it's super powerful.
Yeah.
The price broke this level out right here, and price also broke this level out right here. So then what do you see? Price on the weekly time frame can come back up here or even jab into this level to continue price down. Same thing what happened here, right? Rejection, price broke out, weekly tested this level again and went up. Same kind of approach you can apply here. Price broke out this level and now price wants to come back and test it. What broke this level out is this one right here. That's the closest one. That's what you want to monitor. You can also draw out this level, but that can take a while. We look at the most closest one, which is these two levels. Now, if you go into week daily, again, what can we see on the daily? You have this engulfing look right here. I don't want to confuse you guys, but let me actually go back into weekly. Take this out. I'll take this out. I'll take this out, and I'll take this out and focus on the most recent one. Okay, so this is weekly.
And yes, you also have here at this level, it's a classic daily SNR.
Daily SNR, and also type 1 drop decision. That's what it's called, drop decision, okay? This is engulfing is a drop decision.
Yeah.
So what do we want to see, right? For now, if we want to see price come back into this level, we need to see the closure above this. It can obviously, shoot right into here and then go. It can do that, sure, why not? But we have to play it level by level, candlestick by candlestick. This is the most recent support. It was Oh yeah, it is support because price opened and closed, reject this level, and dropped. But now if price breaks out from it, it's a breakout of support. So again, price could do two things.
And today, Robbie, in H4, you can move to H4.
Yeah,
little
yeah,
bit.
I can. I
Okay,
just
okay.
want to show you guys something. It could tap into H4. I mean, excuse me. It could tap into this level. It can do two things. Tap into here and also tap into here. But let's go to H4.
Today we had this, Robbie. Look at this. Amazing deal. Amazing one.
Yeah,
You
yeah.
will see.
Did it really?
No. This, sorry, the other one, the other one. This one.
Oh,
That
yes,
one.
yes, correct. Perfect. Yeah. That's great.
Mhm.
Beautiful. This entry, guys, this entry was actually, I was asleep for this one, but it came from H1. I remember monitoring this level. It came from H1 engulfing rally decision. And to get involved in this one, you would have to be, yeah, you would mark that one out, but then that idea of double rejection last push tapped into our trend line, last push into our trend line. Last push is pretty much the rejection at a key level. The second tap is a rejection close, and then you can enter here.
Yeah.
But if you didn't get this one, you would have been chasing price, and it would have been very hard to get involved into this one, unless you, even if you looked on to, like, I don't like going to M5. I don't like that shit. It's just too much noise. For me, I didn't even take any trades because I was happy with my sell down here. So this I was already expecting to happen because I knew that weekly had a breakout. So that happening, daily is gonna buy up, and it's happening again. H4, if price closes around here like this, tomorrow price can open up and do something like that. Probably during London. Asia session could do this. Come here, create areas of
But for this scenario, we need to daily close above this level.
daily gap.
Yeah, we need to close.
Daily gap. Because that would also confirm this rally decision to go up.
Cool.
Yeah. Okay. So yeah, that looks like the picture for the gold this week. It's gonna be up. If you guys want to back test that whole concept of OHLC, go to the weekly and then pick a candle. Pick a candle. So we'll go to this bullish candle. And we will draw out candle. Go to H4. What can we see? All right. The open. This is okay, Monday. Right? This is the wick here. This is the body. And then this is, oh, okay. This is the body. and this is the wick. Right? That's pretty much it. Closed here. This is the wick. So this concept is very easy to grasp, but people really don't they overlook the whole idea of OHLC. But if you can apply that knowledge and see that the rule is, if price is going up, it needs to go down first. If price is going up, if the weekly price opens up and it's going down, that means the rest of the week is going to go up. Vice versa. If the weekly price opens up and it's going up, it's going to go down first. So what can you see again? I'm going to go over one more example and then I'll call it a day. But right here, this candle, it didn't give us a big rally up, but it still bought up. So let's check it out. Let me get this right. So we know that price has to buy up first, right? What happened? Price bought up, open at this candle right here. It bought up and then it dropped. This was a pullback, but still, it's still open to buy up and it dropped. And the closure happened right. Actually, it happened. Okay, so open. Okay, yeah, I got it. Open, high, low, close.
Yeah.
So basic concepts, very powerful shit. To apply with your whole knowledge of storyline and structure, mostly higher time frame, weekly to H4. You can see this happening all the time. Again, is there any questions on trend lines?
No, clear.
No by the moment. We need to practice and then,
Yeah, looks like there was about 3-hour session here. Pretty
cool,
long one.
Robbie. No, it's
So-
okay. It's okay. Really, yeah. No problem.
So yeah, good. All right, man. Well then take it easy. We'll all talk later, and I will upload the video as soon as the class is over. When it's over. When it's over uploading, I'll put it into the chat.
Cool.
Thanks, man. Thanks for
Cool,
the time.
Yeah,
No
thank
problem.
you. Thank you very much.
Thank
All right, guys. Take care. No problem.